I'd like to welcome Baris Akyurek, Vice President of Insights and Intelligence at AutoTrader. Baris has more than a decade of Canadian auto industry experience, and he leads a research, analytics, and insights team that helps consumers, automakers, and dealerships make informed decisions. His expertise ranges from vehicle pricing to consumer behavior to industry trends. Welcome to the show, Baris. Great to have you.
Thanks for the invite. I appreciate it.
It's a great time to have you on our show to make sense out of all this, and hopefully you can help us make sense out of, I guess, shall we call it the chaos in Canada and the U.S. right now. Interesting because I think the president would say not much chaos on their side, but definitely think the chaos is on their side as well as because we know that these tariffs are causing some pain for U.S. consumers, just like us up here. So I thought we would start off with kind of some general questions about the auto industry. We know the auto industry makes up a large component, Canadian GDP and importance to Canada, and especially Southern Ontario. But what does the auto industry mean to you with respect to what it means to Canada and Ontario? Like, what would you say the importance is?
Importance is big. After energy, I think the automotive sector is the second largest contributor to the economy, largest in Ontario. Lots of jobs. I think around 130,000 jobs directly are in automotive, and if you think about the broader impact, it's estimated to be around 600,000 jobs. So it's big, it's important. Yeah, so I mean, I think going back to what you were saying around, there's being a chaos, that I agree with that. And that chaos, I think, continues today as well. There's some news that are being to be shared in the afternoon. So it's just we're going day by day. But on the other hand, obviously, it's very important for us to understand what's happening, not only for the business, but also for consumers, dealerships, and automotive manufacturers. So as soon as we know more, we dig into the data, we do research, we do analysis, and try to inform Canadians as much as possible.
Right. And so no wonder the Premier Ford has talked about potential loss of a few 100,000 jobs.
Yep.
It's definitely not an exaggerated number. What do you think the auto industry means to the United States? Let's say a state like Michigan, looking at it from a higher level, obviously it would have a big impact. These tariffs would have a big impact on them as well, I would think.
Of course, of course. So, I mean, to be honest with you, in terms of the impact on Michigan, I'm sure there's going to be a big impact, but we didn't do any analysis on that. We are concentrated on the Canadian market for obvious reasons. But on the other hand, so looking at high level, so we did some back of the envelope calculations to be able to estimate the potential impact of what Trump wants to achieve. So just to give you a few numbers and what we come up with our analysis is that in the US, 16 million new cars were sold in last year, right? And depending on the source, we export around 1 to 1.3 million cars down to the US, new cars, that is, right? So it's about 9% of all cars sold in the US is manufactured in Canada, right? Give or take 8.8%, 9%. So, and what we did was, so you know how he wants to cut us off and produce all of these cars in the US. So what we did was we try to figure out, okay, on average, how many cars are being produced in an automotive plant? And it's around 212,000, give or take, right? And then it takes 18 to 36 months to build a plant. And, on average, 212,000 cars on an annual basis. So even if they want to do this, cut us off and start building today, it would take them like more than 2 years to build these plants to be able to absorb all this Canadian manufactured vehicles. So to be honest with you, I don't think it's feasible. And in a couple of years, obviously, there's the midterms, and then, He's going to be out by, when is that, 2029? So there's not enough time to be able to convert this into an advantage based on how we've done it. So again, we don't think that this is feasible, but it is what it is. We'll see what happens, Alan.
We'll see what happens. Yeah. Well, I know the Ford CEO, Jim Farley, suggested recently that the tariffs on Mexico and our country, Canada, I think his quote was, would blow a hole in the U.S. auto industry. And he's obviously been meeting with lawmakers to try and prevent this from happening. Um, do you actually think, like you mentioned, about how long it would take to build a plant or set up a plant? Do you actually think we could see plant closures up here that they could, in essence, I guess, be forced to reopen in the United States?
So again, I don't want to speculate because I don't think anyone knows, but we did do some thinking around this, and let me explain to you how we are thinking about this. So if this is a short-term thing, right? So probably, again, based on what we've heard, I don't want to name any OEMs, but based on one OEM made a statement when these conversations started to come up. And then they said that it's a short-term thing. We'll just keep producing the same number of vehicles as we always do. I also had some confidential conversations with other individuals in Canada, and that seems to be the consensus, right? So if it's a short-term thing, we don't think that there's going to be an impact on production right away, right? And also, in addition to that, if you look at the new car inventory that's available on the lots, we are sitting around 80 days of supply, meaning that if there's no more new cars coming into the market, given the ongoing sales rate, it would take 80 days to deplete the existing inventory. So we have some buffer, right? And if it's a short-term thing, what we expect is that there's not going to be a big impact on production. But that said, if these, I mean, again, I know that we're in the middle of probably negotiations right now, but if these tariffs are short term and stay at 25%, of course there's going to be an impact on prices, right? Because everything's going to be more expensive. And what happens? Everything's more expensive. That means that the demand on new cars is going to come down, right? But if the supply keeps building up, right, there's going to be more supply, less demand. And in a normal economic environment, you know how we say economics 101, when the supply is up, demand is down, prices go down. But because of tariffs, we don't think that's going to happen. Prices will go up because of tariffs. So that said, going back to what we observed during COVID, right? In COVID, beginning of COVID, I'm sure you remember, because of all these microchip shortages and supply chain disruptions and whatnot, there weren't enough new cars. So what happened to the demand? The demand shifted from new to used. So what we expect to see is that the same phenomena would happen, again, if the tariffs are short term. So what we expect to see is that demand is going to shift from new to used. And if you look at the used supply, there's some supply out there for sure, but it's also a bit constrained because of all these COVID era challenges. We've started to overlap those challenges. So supply is a little constrained. There's going to be more demand on the used side. And what we expect to see is that used car prices will react and they'll start to go up as well.
Yep.
So that's how we think about it short term. And if you ask me our long-term view, I think that's a whole different animal.
Yeah.
If plants started to close, if this thing, more than X number of months or years, probably the impact wouldn't be only for the automotive market, but also for the entire economy.
What do you think about, you mentioned pricing briefly. I've heard that it could cause prices to go up anywhere from $3,000, $4,000 a vehicle to as much as $12,000 on some bigger trucks. Is that reasonable to think that prices could, I guess, and everything in between, I imagine, but prices could go up by that much?
Yeah, so I've read the same reports, Alan. But again, I'm not really a manufacturing expertise. I don't know. But the fact is that prices will go up, right? And think about it. So if price is $3,000, $12,000, whatever it is, and I think if you think about the consumer psychology, right, how we shop and how we buy things, right? If something that you want to buy is $70,000, right, and the next day it sells for 75, whatever the case may be, it also creates a little bit of a hurdle, right? Mental, even though if you can financially afford that additional $5,000, right? Probably you wouldn't pull the trigger. At least I wouldn't. So I think whatever the numbers are, $3,000, $12,000, there will be an increase in prices, and therefore we'll see a change in consumer behavior and how they buy and what they buy.
Yeah, for sure, for sure. Would you say that all auto manufacturers will be affected in the same way, or do you think some manufacturers will be affected more than others? Will Ford be affected more than GM, or vice versa? Like, would it be exactly the same right across the board, or do you think that would be disproportionate?
Probably, again, I don't want to speculate, and I don't want to get into a make model discussion, but probably there are going to be some differences depending on what percent is produced in Canada versus the US and Mexico, and there's a lot of like integration going on, and again, also in addition to that, the current availability is also is important. If there's a lot of cars for a certain make and model, probably they won't get impacted as much. But if there's a lot of demand on certain make and models, and if they are impacted, probably. But overall, there will be an impact. But at, how much would it affect Ford versus GM?
Hard to say. Yeah, I guess my last question, I would ask you more of a general question,
Sure.
not necessarily, well, I guess it is related. It's always related to tariffs these days. Interest rates. Do you find that more vehicles are sold in an environment where interest rates are coming down, lower interest rates? I would imagine that would be the case. And could interest rates dropping on both sides of the border offset perhaps some of the effects of these tariffs?
Yeah, good question. So we do have internal transactional data. So we have access to interest rates and transactional prices and loan terms. So let me tell you what we've been observing. So first of all, because of the decline in Bank of Canada's interest rates in the last while, we are seeing a corresponding decline in automotive loan rates as well. So just to give you maybe a couple of points here, high level, new car interest rates at some point hit on average 7.4%. It was November of 2023. And then they came down by quite a bit now, by 1.8%. Now we are sitting around, this is February data, and we're sitting around 5.6%. Same goes for used car interest rates. They didn't come down as much, but the average was around 11.3%, and now we're looking at 10.3%. So the short answer to your question is interest rates are declining, obviously good for affordability. But on the other hand, when we look at car prices based on the vehicles that we have on the site, and I'm not talking about transaction prices, I'm talking about listing prices. Prices are also coming down. So just to give you, again, a couple of data points, new car prices are down by 3.3% on a year-over-year basis, and now we're sitting at just below $65,000. And used car prices are down by 4.5% on a year-over-year basis, and now we're at 36.8. So prices are coming down, interest rates are coming down. So let's I know it's difficult to forget the tariff conversations, but let's put tariffs on the side for a second. So looking at the market has actually been doing pretty well, both for new and used in the last while. So going back to the COVID era, supply chain disruptions and microchip shortages and whatnot, we estimated that between 2020 and 2023, 1.5 million fewer cars were sold, new cars, right? So now that the cars are back in the market, so based on the inventory that we have here, there's some differences at the OEM level, but when you look at the aggregate level, we are almost at 2019 level. So inventory is back, cars are getting sold, and last year was pretty good, 8.2% year-over-year increase. Before that, it was around 14% increase for new vehicles. So cars are getting sold. Used car market it was last year is the story was twofold. The first part and a bit, it was a bit on the softer side. Again, going back to your question, prices were on the higher side, interest rates were higher, but they came down by quite a bit. And in fact, for used vehicle prices came down by 12.1% for 2024, largest recorded decline ever. So what happens, right? Prices are coming down, interest rates are coming down, people need cars, consumers need cars, and they're getting sold. So last quarter of last year was pretty strong. January was pretty strong. February, because of the weather and tariff conversations, we are seeing a little bit of softening. It's flat on a year-over-year basis. So if we just, forget about the elephant in the room, the market is actually healthy. But when you start talking about tariffs and 25% increase on stuff, $3,000 to $12,000 impact on new car prices, obviously that changes the whole equation. But again, hopefully we'll get some good news today, and we're going to go back to business and keep selling cars.
Yeah, for sure. Hopefully we get something this afternoon, as we've been told. Baris Akyurek, Vice President of Insights and Intelligence at AutoTrader. Thank you so much for coming in, or I guess joining our show today, and giving us some insights into the auto industry. As you've said, a very big and important part of Canadian economy, GDP, and perhaps we'll look forward to bringing you back again down the road when tariffs are not the topic of conversation.
Hopefully not. Yes, but thanks for the invite. I appreciate it.
Thank you.